Nobody is ever going to tell you when a crash like this is going to get worse. All the signs are there that we put in the top. This is not another correction, okay? We should have crashed longer and harder into 2009 and 10 even, but central banks stopped that. Well, they threw everything they had at more than I or anybody would have ever forecasted. They overreacted, and that's precisely why they finally had to tighten again. And they're thinking, since the economy's been strong, that it's because it's strong. No, it's all been stimulus. So you know my view. The economy and stocks are not going to react to this well, already haven't. Already looks like we're moving this third wave. All we need is a real clear break to new lows at this point, okay? 10,088 is the line in the sand on the NASDAQ. That's just 4 to 5% away. We could be there in a heartbeat. There couldn't be a more critical time than this. We are 4 to 5% away from this crash becoming even more obvious than it already should be. And then people really start panicking when they realize, oh my God, yeah. There is no rescue, there is no new high coming, and it only looks like stocks are going lower. I think we're very close to that moment. So this is the time to get serious, again, about getting out of risk assets to the degree you haven't, getting into those safe haven treasury bonds. It's not going to be gold. Gold has held up as usual reasonably in the early stages of this, but that's what it did into the first half of 2008, and then it crashed almost 50% with everything else and went crying for mommy. So you got to get serious about being extremely defensive now. And you got relatives and friends that you know are not taking this seriously, and most people still aren't, you need to warn them now. And this is the time to tell your friends and relatives, you better get serious about this, because this is when the rubber meets the road. Again, what have we seen here? At first, 34% crash, okay? And then a good rally, okay, perfectly. That's the 2-wave off the 1-wave crash. And it didn't go anywhere new highs. Another good sign. Then we see another wave down, 2 new lows. A great sign. That's the beginning, should be the beginning of the larger and probably most forceful third wave. This is the one that's going to hit people the hardest. And by the time people wake up a few months from now and say, oh, I should have sold, it will be too late. This wave should take us down 55, 60% from the top instead of 34% in the NASDAQ and things like that. So again, this is the final warning here. When you're in a crash of this magnitude, once in a lifetime, like 29 to 32, or somewhat close to the 72 to 74 crash, you know, this is the way it's going to be. It's going to be tricky. And what it continues to look like at this point, and given that there's so much government manipulation of this bubble on the upside, and of course they're going to fight it on the downside, knowing how bad it could be, you know, is that it's not going to be easy to read this thing. But again, still looks like to me we saw the first wave of this bigger 2 to 3 year crash, okay, into mid-June, okay? We bounced from there, you know, into mid-August. That looks like the 2-wave bounce to me, and it appears ever since we've seen the first wave down to lower lows, 10,088 on the NASDAQ, the key thing I'm tracking. And so that looks to me to be the first wave down of the larger third wave that should be in progress now. I don't want to get too complicated here, but it's important to understand that the next wave down is important. It looks like it may have already started recently. A break of 10,088 on the NASDAQ, a convincing break, not a slight new low and then a bounce, would be a sign that this third wave is in progress. And you know, it's likely to take us all the way down to the last major low, 6,700-ish on the NASDAQ, 2190 to 2200 on the S&P 500. And that will just be the third wave down crash. Then you'll see a fourth wave bounce, and then a fifth wave that could go into at least the end of 2023 and likely into mid-2024. And again, that would be more consistent with past crashes, but this one could be different. But I don't see this crash lasting less than 2 years, or a little more like 2.5 years, more like the 29 to 32 crash. So again, we're at this critical point. The markets are having a hard time going up further here on this bounce. And again, it wouldn't take much for the NASDAQ and stocks to keep going down here and break that 10,088 level, which has been the low thus far. So that's what I'm looking at this point. I do think we've begun this third wave. And the third wave tends to be the strongest and longest, but not always, but certainly should be at least as strong in how far it goes down, and at least as long as the first wave. And then the fifth wave could be that or more too. So let's watch these markets. And again, I keep telling people, last chance to sell, last chance to sell. Well, I think this bounce that started in June when we've gone more sideways and slight new lows in August, but this I think is probably the last bounce. And yes, it could always go higher, but it's looking more like even this could truly be the last chance to sell, because the third wave of the third wave, if that's where we're at, and that's again best what it looks like right now, that should be a strong wave down, and that should be the telling sign that, folks, we are not in a big correction. We have seen a major top and we are in a major crash. This bubble that's been extended and extended since the 2009 lows, and central banks just saying we'll print endless amounts of money, which they did until they overdid it and finally had to tighten some, okay? Well, that's enough for the markets to get scared, because they've been running on nothing but stimulus since 2009, okay? The whole boom from that into the late 2007, I was the one that predicted that the earliest. Baby boom generation, greatest boom in history, okay? It was over after that. 2008 was a serious crash, did look like 1930, the next Great Depression, for good reason, and that's what got the central banks panicking. So they've been printing money wildly ever since. I studied all the crashes back a couple hundred years since we've had stock markets, and it basically says a bubble doesn't burst until you get at least a rapid 28% crash, and better on average closer to 40%. Well, we finally got that into June 2022. NASDAQ down 34%. And the fact that that went down farther, down 38% more recently, just confirms that even more. So I've been saying this finally clearly looks like a top. So now your strategy is selling on bounces if you didn't. And I gave my strongest all out, two of them, clear sell signals, all out sell signals for stocks in December, just before the January 4th peak in the S&P, and just after the November 22nd peak in the NASDAQ. So we did warn about this, but there's still people I know that have positions, and you still got friends out there that don't have a clue of what's going to happen. We have seen a major top and we are in a major crash.